Well, it's that time of year, time to look at some naughty and nice stocks. We have 5 stocks on our list, and here to check them twice is Tim Seymour, founder and chief investment officer of Seymour. I can't help it. I'm a festive person.
It's perfect, Dom. And by the way, before we start, I ran into an older gentleman in the parking lot wearing a red suit, stepping off a sleigh. And he gave me a treat for Kelly. He said, you've been amazing this year.
Look at that.
And unfortunately, Dom.
What did I get? You're going to give me coal, aren't you?
I don't know what that means. But I'm wondering if you were not taking out the trash this year.
Gave me coal. It's literally individually wrapped coal.
It was uncomfortable for me to deliver that, but anyway.
Thank you, Santa.
Well, thank you very much, Santa. I will try to improve my performance in the next couple of days here. All right, so let's get to the naughty and nice list with my coal in hand. The first up is NVIDIA. Tim, will this be naughty or nice to investors in the coming year after a tripling of the stock over the last year itself?
Yeah, sorry, let me put my tie back on. I've been naughty here. And I would say
you get the better.
There you go.
It's been oh so nice over the last couple of years, but it's a naughty one in 24. And here's why. Less nice in terms of, I think, multiple and whatnot in 24 equals naughty for a stock that's had such a great run. It's priced as if it's one of the most important companies in the world. It is. You can make an argument it's cheaper than Intel out in 25 at $25 a share in earnings. If you get there, I think the competition's coming, not as fast as many do, but I think you're naughty next year. It's relative naughty.
Well, the next one is just as much of a high flyer this year, Bitcoin.
Right.
What do you think naughty or nice for Bitcoin in 2024?
I think Bitcoin is nice. Ooh. And I think the reason Bitcoin has been nice in 23 or the setup is the same that we have going into 24. It's a dynamic of less Fed. It's a dynamic of look at the chart of gold, which, by the way, I think is one of the best longer-term charts in the market. And I think some of those dynamics, at least for why people own Bitcoin, central bank buying, diversification, less Fed and less growth, I think Bitcoin is nice.
All right, so let's talk a little bit about the energy sector. We talked earlier with Pippa about some of the dynamics in oil and gas. How about Chevron, an oil major integrated? Is it naughty or nice?
Yeah, it's definitely nice. It's been a naughty run for energy after 2 very nice years, 21 and 22. But Chevron and the other big integrated oils, we're talking about a free cash flow growth story. We're talking about paying down debt. I'd make an argument that Chevron's dividend breaks even around $45 oil or better. I think these companies are run for equity investors. In other words, they used to be run at growth at all costs. Energy, I think we all believe, would be defensive necessarily in a world where the markets have had a big run.
Down 14% in 1 year. So you could argue, not terrible given what's happened with.
No, you're not chasing this one. I think it showed pretty good support. And again, there's obviously a macro play here and a demand play that if you think we're going into recession, energy companies are going to struggle. But you've struggled a lot already. The valuation relative to the S&P, again, they're always cheap, but relative to the S&P, very cheap.
Our next one's an interesting one because we could say it's defensive because it's healthcare, but it's Eli Lilly, which is the NVIDIA of the healthcare sector. So what would you do, naughty or nice?
Yeah, I've got to naughty this one. And this is a function really of where it's coming from. And again, I think the delta on this thing is the multiple isn't crazy. We know what's going on with the addressable market. I think there is competition coming with orals, but one of the biggest issues really is just insurance coverage and who will be able to own this. I don't think there's any question that this is doing wonderful things for a lot of people, and it's not just the aesthetics. I mean, I think this is the dynamic here, but I think the multiple is starting to get to a place where I don't think I need to chase this one. Healthcare overall, I mean, I think there are other names within the ranks that have really had a tough 23 and could be the names in 24.
Anyone you want to mention real quick?
Well, yeah, I think Merck is very interesting on the multiple. And I look at some of the core pipeline there, and I think you're going to see some breakouts, and I think they're going to participate in a couple of these hot areas.
And we can't do Christmas without a retailer, so Target. What do we think about Target?
Target, first of all, let's get this out there. I think it's nice. It's certainly been nice over the last month. It's really closed that if you're a pairs trader relative to Walmart. I think the inventory dynamic has been reset. I think we're starting to see a little more discretionary spend. I think disinflation isn't bad. Deflation is very bad for retailers. But the multiple at 14 times 24, I think, is something that's attractive. And I think you've priced a lot of risk into Target at this point. So let's be nice next year.
All right, there's the naughty or nice list.